Street is focused on bearish factors. They fear bleak prospects of the US businesses as the coronavirus resurgence poses a threat to the fragile economic recovery. A new stimulus package has not been settled yet. The US dollar has been extending weakness across the board. The number of coronavirus cases and the economic revival cannot happen at the same time. Investors share the viewpoint that a steady recovery of the global economy will depend on joint efficient efforts of authorities to contain the pandemic. So market participants are likely to welcome new lockdown measures. Meanwhile, the market is anticipating extra stimulus measures. This question will resurface at the US Congress next week. American lawmakers will have a few weeks to pass the bill on financial aid to companies and households hit by COVID-19. As soon as the market finds out the positive news on the stimulus package, investors will regain appetite for risk. The U.S. benchmark stock indices are trading mixed on Monday. Futures on the Dow Jones edged up 0.02% in the early New York session to trade at 26,524. Likewise, the S&P is trading at around 3,216 points. The market perked up following the news on the vaccine front. Germany-based BioNTech and U.S. pharmaceutical giant Pfizer released an update on their joint vaccine trials. The medicine is not hazardous and revs up the human immune system. Investors are closely monitoring a stream of financial records. This week, Coca-Cola, Lockheed Martin and United Airlines are due to report their corporate statements. Experts reckon that profits of 500 large U.S. companies tumbled 44% in the second quarter. Soaring infection rates in the U.S. dealt a blow to the U.S. dollar. It was losing ground during the whole last week. Today, despite a minor growth, the U.S. dollar remains under pressure against a basket of its rivals. Its index is still following the downtrend, trading at near 95.95. Oddly enough, recently investors neglected the fallout from the pandemic. Nevertheless, the US economy is facing tough challenge. Consumer sentiment has been already dented. It does not make sense to hope for other upbeat macroeconomic data. In this context, investors are poised to open short deals on the US dollar. The Canadian dollar is taking full advantage of its American peer. Today, the loonie is advancing despite a downward correction in the oil market and other headwinds. Wholesale prices in Canada fell short of expectations in June. It means that retail sales data, which is due this week, will also discourage traders. Meanwhile, the US dollar versus the Canadian dollar pair is trading lower at about 1.3560, having shed 0.13%. Benchmark oil prices are going through the downward correction. This stage is likely to continue for the whole week on the grounds of old drivers. That's all for now. Thank you for watching and see you back tomorrow. Bye.